Hi, my name is Moses, and I'm the Lazy Frugal Millennial. Today, I want to go over why you should be buying Bitcoin. As usual, none of this is financial advice. I'm just some random guy on the internet. First, I want to briefly talk about what Bitcoin is and how it works. If you want a more in-depth explanation, there's tons of videos out there that you can watch that'll do a good job of explaining it. At its most basic definition, Bitcoin is a decentralized and semi-anonymous digital currency meant to serve as an alternative to other currencies. You may already be familiar with digital currencies if you have a bank account, use credit cards, or use services like Venmo. In fact, about 92% of the world's money is digital. But unlike the money sitting in your bank account or your Venmo account, Bitcoin is completely decentralized and unregulated. There is no central Bitcoin reserve that controls and issues Bitcoin like the Federal Reserve or the US Treasury Department do for the US dollar. To own Bitcoin, you don't have to ask any government for permission, you don't have to have a bank account, and you don't have to provide any identifying information to anybody. All you need is a Bitcoin wallet, and your wallet is going to have a unique string of characters identifying your wallet. It's kind of like the routing number and account number for a bank account. In case anybody wants to send me any Bitcoin, here's my wallet address, and here's a QR code to make it easier. Instead of running on a centralized banking system like most currencies, Bitcoin runs on a type of database called the blockchain. If you've ever used Excel, then you're familiar with the basic look and structure of a database. You can create big data tables filled with tons and tons of data, and it makes it very easy to add new data or search for existing data in the tables. When you log into a website with your username and password, the website's going to look through the company's database for your username and password. If they match, then it'll pull your information out of the database, like your name, email address, previous orders, and so on. This type of database is a centralized database, meaning that there's only one working copy on the company's servers. However, the blockchain is a decentralized database with millions of copies around the world constantly being updated. The blockchain stores every single Bitcoin transaction that has ever happened. And for each transaction, it records the sending wallet address, the receiving wallet address, and the amount of Bitcoin sent. Anyone that mines Bitcoin has a copy of the blockchain, and if you want a copy of the blockchain, you can just go and download it. But since Bitcoin's launch in 2009, that database has gotten pretty big. Right now it's sitting at about 320 gigabytes, or about 5 iPhones worth of storage. Many people believe Bitcoin is anonymous, and that's true to an extent. You can run a Bitcoin wallet on your phone or your computer, and most of these don't require any identifying information, so they run anonymously. However, there are services like Coinbase that hold a Bitcoin wallet for you, and those do require a lot of personal information. It's kind of like opening a bank account. Due to the nature of the blockchain, you can look up any transaction that has ever happened, including ones for anonymous wallets. So if your wallet address becomes associated with you somehow, it's pretty easy to connect the dots and look up every transaction you have ever made. Bitcoin hit $1 per Bitcoin for the first time ever on February 9th of 2011. On January 1st of 2020, it was sitting at about $7,200. Over the last year, the value has skyrocketed to a high of $57,000. Right now, it's sitting around $50,000. In the last 5 years, it has increased almost 12,000%. You may hear this and think that you need to throw all of your money at Bitcoin right now, but there's a lot more to Bitcoin and cryptocurrencies in general that you should understand before investing in them. The first problem is that Bitcoin has no backing. There's nothing with value that Bitcoin is tied to, giving it its value. And of course, there's a lot of people that make the argument that ever since we got off the gold standard, the US dollar doesn't have a value backer either. But that's wrong. The US dollar isn't backed by gold anymore. It's backed by the strength of the US military. Every single person and country accepts that the US dollar has value because they don't want to get a visit from Uncle Sam. So when you hold US dollars, it's backed by the strength of the US military. When you buy stocks, it's backed by the value of the company. But when you buy Bitcoin, it's backed by nothing. The only reason that Bitcoin has value is because people believe that it has value and are willing to pay for it. So as long as people continue to believe that Bitcoin has value, it will continue to have a value. We can be relatively certain that 1 year from now, $1 will be worth $1 plus or minus a couple of cents. With a stock, depending on how the company is doing, we can get a general feel for whether the stock will be going up or down in the next year. But since Bitcoin has no value backing, it's highly volatile. We have no idea what it'll be worth 1 day from now, much less 1 year from now. In order for Bitcoin to work, the Bitcoin mining network has to be operating 24/7. Bitcoin miners run crazy powerful computers that solve complex mathematical equations all day long. At this point, Bitcoin mining has gotten so difficult that you basically need an entire warehouse full of powerful computers just so you can be effective at Bitcoin mining. These complex math problems are used to process Bitcoin transactions, secure the blockchain, and create new Bitcoins. But these warehouses full of super powerful computers solving really hard math equations all day use a ton of electricity. In total, the Bitcoin mining network consumes 121 terawatts of electricity. To put that into perspective, that's enough to power 1 billion houses for a year, or to charge 2.4 billion Teslas. That's a lot of electricity. To produce that much electricity requires burning 14 million tons of coal, and pumps 43 million tons of carbon dioxide gas into the atmosphere every single year. It takes 2 million trees just to counteract the Bitcoin network. I might not be so bothered by that if the Bitcoin network wasn't so horribly inefficient. When you swipe your credit card or your debit card at a store, that transaction gets processed over your card issuer's network to verify the transaction. Both MasterCard and American Express can process 5,000 transactions per second on their network, and Visa can process 65,000 transactions per second on their network. But do you know how many transactions the Bitcoin network can process? 7 transactions per second. So the Bitcoin network is pumping tens of millions of tons of carbon dioxide gas into the atmosphere to process transactions, and it's not even good at processing transactions. Over the years, I have used Bitcoin several times for legal transactions, and it is horribly inefficient at transferring money in exchange for goods or services. When you buy something online, you type in your credit card number, hit checkout, and within seconds, your transaction is confirmed. With Bitcoin, that confirmation takes anywhere from 10 minutes to several hours. And maybe for online shopping, waiting an extra 10 minutes isn't a huge deal. But now imagine having to wait an extra 10 minutes with the cashier at the grocery store. Despite these issues, I think that Bitcoin still has some very unique and useful features. The primary benefit is that it is very easy to convert just about any currency into Bitcoin and vice versa. It is also incredibly easy, cheap, and fast to move money with Bitcoin compared to the banking system. Let's say you're doing business with a company in India and you need to send them $1 million. The most common way to do that is through an international wire transfer. You would need to go to your bank and exchange your $1 million for 73 million rupees. Your bank is going to charge you about a 1% exchange fee to do this, so $10,000 in this case. Even if your bank says they don't charge fees, they do. It's just built into the exchange rate. Now that you have 73 million rupees and are out $10,000 in fees, now you have to wire the money to India. For large international wire transfers, banks usually charge a percentage fee of between 0.5% and 4%. So let's go with the midpoint of 2.25%. That's going to add another $22,500 onto this transaction. Then on top of that, international wire transfers take about 3 to 5 days to actually process. After all is said and done, it costs you $32,500 and 3 to 5 days worth of time to transfer money from one country to another. But now let's run that same transaction using Bitcoin. You convert your $1 million into Bitcoin, and that's going to buy you about 19.5 Bitcoin right now. Every crypto exchange has a slightly different trade fee, but it's usually around 0.2%, or $2,000 in this case. Then to send your 19.5 Bitcoin from your Bitcoin wallet to the Indian company's Bitcoin wallet, you're going to have to pay a small fee to the Bitcoin network to process the transaction. This fee varies a lot depending on network traffic and how quickly you want your transaction to happen. But right now it's about $14 for a block, and that fee gets split across all the transactions on that block. That means that you're only paying a few cents to move your 19.5 Bitcoin around the world. The Indian company will receive them between 10 minutes and a few hours, and then they pay another $2,000 fee to convert it from Bitcoin to rupees, and now they have their 73 million rupees. Using the Bitcoin network, this transaction cost $4,000. That's a savings of almost 90% over the traditional money transfer process. And on top of that, you save several days worth of time. I don't think that Bitcoin makes a very good currency for everyday transactions, and I also don't think that Bitcoin is a very good way to store money. However, I see tremendous value in Bitcoin's ability to transfer money between people, companies, and countries. But right now, I don't think that Bitcoin is a good investment. And in fact, I don't think that Bitcoin is an investment at all. Bitcoin was never meant to be an investment. It was created as a decentralized currency that didn't require any third parties to manage it. Bitcoin was supposed to serve as an alternative to cash. So exchanging your US dollars for Bitcoin is kind of like exchanging US dollars for the Chinese yuan or Canadian play money. But due to the high volatility of Bitcoin, I don't think that it's a very good way of storing your money. In my investing $10,000 video, I said that I wouldn't be too surprised if Tesla dropped 30%, but I doubt that they will ever lose all of their value. That's because Tesla is a productive company that owns valuable technology, and that's what gives their stock value. However, Bitcoin could drop to zero tomorrow with no warning. As long as people believe that Bitcoin is secure and has value, it will continue to have value. But if it ever loses attention or the blockchain gets compromised, it could very quickly lose all of its value. Bitcoin is supposed to be decentralized so that no one entity has control over the network. That would give them the power to change Bitcoin or the blockchain. That means that we don't want any one miner or country to have more than 50% of the total mining power. If any one miner or country has more than 50% control over the blockchain, then they could do what's called a 51% attack. That means that they could single-handedly block transactions, create new Bitcoin, stop the creation of new Bitcoin, or reverse transactions to double spend Bitcoins. You may think that's unlikely, but right now, over 80% of all Bitcoin mining power is in
China.
Bitcoin mining power is becoming heavily centralized in one country. And if that one country decides to change their stance on Bitcoin, it could land a devastating blow to the entire system. Buying Bitcoin as an investment is more gambling than anything else. When you make money with Bitcoin, it's good luck. When you lose money with Bitcoin, it's bad luck. That being said, I don't think that gambling on Bitcoin is necessarily a bad thing. When you go into a casino, you're pretty much guaranteed to walk out with less money than when you came in. But when you buy Bitcoin, you can still hold on to it when the value drops, and it will likely still have some kind of value that you can exchange for cash. If trading Bitcoin scratches your gambling itch, then I don't really see a problem with that. Personally, I get my gambling fix by trading risky stocks on Robinhood. Sometimes I get really lucky like with GameStop and Virgin Galactic, and sometimes I get really unlucky like with GameStop and Virgin Galactic. But unlike at a casino, I'm not just throwing money into a pit never to be seen again. I still own an asset that I can either hold on to or sell for cash at any point. If I had put my money into Bitcoin back in 2015, instead of spending it on a business degree, right now I would have $6.2 million instead of a piece of paper with my name on it. I don't think that there's anything wrong with putting your money into Bitcoin or cryptocurrencies. I just think that Robinhood adding it to their platform and finance gurus pushing it has given people the wrong impression that Bitcoin is an investment. Bitcoin is not an investment. It is a cryptocurrency. When you put your money into Bitcoin, just realize it is very risky. You're basically gambling with that money. You may get very lucky and become the next Bitcoin millionaire, or you may get unlucky and end up stuck holding the bag. And really, we don't know which it will be. At this point in the video, I was planning on buying $1,000 worth of Bitcoin. Ever since the GameStop craze, it's been really hard to identify promising stock gambles. Hedge funds have been pumping stocks trying to make a quick buck off of new traders, while the media has been lying through their teeth about what Wall Street Bets is doing. I mean, who the f*** is trying to short squeeze silver? That's not how this works. Because of this, for the last month, I've just been putting my money into boring, stable stocks. But in the last week, Bitcoin has gone from $52,000 down to $46,000, and Bitcoin typically rebounds pretty quickly, so I figured, why not gamble a little bit with Bitcoin? However, the stock market has also been dropping this week, and the Nasdaq has entered correction territory. That means that it's dropped at least 10%, but not more than 20%. If it drops more than 20%, that's called a bear market. Tech stocks are the main ones dropping right now, but it would appear that it's affecting the whole market, causing a bit of a sell-off. While that sounds like a bad thing, if you know how to take advantage of it, that can actually be a very good thing. If you have cash lying around, when the market is dropping is the perfect time to put your money to work, because you're basically buying stocks at a discount, and I love getting a discount wherever I can. So instead of gambling on Bitcoin, I'm going to start holding onto my cash for a little bit. Over the next week or two, I'm going to watch what direction the market is going, and then I'm going to make a decision on what to do with my cash. So unfortunately, you're not going to get to watch me gamble on Bitcoin today. Instead, I'm going to take some advice from Warren Buffett.
Buy the fucking dip.
Thank you for watching my video. If you enjoyed it, then please like and subscribe to my channel. Let me know down in the comments if you think Bitcoin's going to the moon. Don't forget to drink your water, and I'll see you on the next video.